G'day taxpayers. I've had a chance to reflect on the RBA on-hold decision from the 8th of July, the run of information that's come out since then, and in particular, the labour force numbers which came out recently. And look, in terms of the labour force numbers, the unemployment rate at 4.3% has hit the peak level that the Reserve Bank was assuming in its most recent round of forecasts. Now, they're going to be updated in the August statement on monetary policy, but 4.3% was the peak that the RBA was looking at in the most recent forecast. So we're there already, and this is before the full impact of the sluggish rate of economic growth, before the impact of the external global tariff war issues impact the economy. So there's something of an upside risk to the unemployment rate from what the Reserve Bank was forecasting. And I note also that forecast peak of 4.3% assumed the cash rate falling to 3.4% by the end of 2025. So that's roughly 45, let's call it 50 basis points of cuts by the end of the year. So I think that if the RBA is to get, well, I don't think it'll actually be able to rein in unemployment at a peak of 4.3, but it does imply that they've got to cut at least twice, 25 basis points increments or more, to stop the unemployment rate getting up too much. So they're probably going to miss their target or one of their mandates. Remember, they've got the dual mandate of maintaining full employment. So anything that we see towards the 4.5%, let alone 4.75% on unemployment is clearly a miss, an error. And we know from the monthly inflation readings, which I like and the RBA doesn't, that inflation's already at the midpoint. So they run the risk of overshooting on the downside, so missing that target as well. So be that as it may, we'll get the June quarter inflation numbers in a couple of weeks. So that's part of the issue too. And the other thing, which I think is a bit of a stuff up when I look at the timing of the next board meeting, 12th of August, lo and behold, the very next day, so they'll make their decision, their announcement of the press conference and the statement of monetary policy, revised forecasts on the 12th. On the 13th, we get the next wage number. Now, how important is that indicator for inflation pressures and the health of the economy? And then the day after that, on the 14th, we get the next labour force number to confirm whether this 4.3% could be a rogue number, who knows, it could be, or whether we get towards 4.4% or something like that, which will, of course, create a whole lot of uncertainty, because the next meeting after that's not till the 30th of September. So the timing of the next board meeting, whoever chose that's made a bad error of judgment. If they'd only waited the following week, they would have had this huge amount of absolutely critical information. And the funny thing is, it is only 5 weeks between meetings, and the next meeting after that's 7 weeks. So, just on a 6-week basis, they could have had the meeting on the 19th of August. So that seems to be a mistake as well. So, look, the governor, Michelle Bullock, gives a speech at the Annika Foundation on the 24th of July. She'll have a chance to sort of talk about these labour force numbers, and particularly in the context of the thing she noted just 10 days or so ago, that the labour market was tight, that there were risks in terms of higher wages, risks in terms of strength in the labour market, skill shortages, these sorts of things, which certainly are not showing up in what's happening in trends in the labour market. So RBA, if only they'd been forward-looking rather than sort of dilly-dallying about their objectives of Nehru and wage price spirals or price-wage spirals, whatever the case may be. It looks as if they're going to miss both of their targets from their mandate, and that's a real pity. And I feel sorry for the tens of thousands of people who will be unemployed as a result of the RBA keeping policy too tight for too long.